Hi everyone, welcome to episode 87 of the Startup Playbook podcast. I'm your host Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. As some of you may have heard, one of the projects that I'm involved with is bringing Acceleprise to Australia. Acceleprise is an accelerator program that invests $75,000 into some of the most promising enterprise or B2b Sas companies. The 4-month program focuses heavily towards sales and growth through providing customer introductions, workshops to help you develop and close leads, as well as access to world-class mentors who have built successful SaaS businesses or are decision makers within large-scale enterprises. If you want to apply for the program, head over to acceleprise.vc, or if you want to find out more, feel free to email me at rohit@acceleprise.vc. I'll add a link to both of these into the show notes below. To provide more context, my guest for today's episode is Michael Cardamone, the Managing Director of Acceleprise in the US. Prior to this role, Michael was one of the first 30 hires at Box, where he was a business development manager before becoming the VP of Partnerships at Academics Direct. He then went on to spend some time as a venture partner at SaaS's $70 million VC fund. Over the last 4 years, Mike has invested in over 70 companies, the majority of which have gone on to raise additional capital and scale, and several of which have gone on to be acquired. We covered a range of topics in this interview, including the ingredients of a strong team, how to develop an effective pricing strategy for your product, how to use partnerships for growth, and what you should look for in the right accelerator program for your business. Without further ado, here's my interview with Michael Cardamone. Hi, Mike. Welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show.
Yeah, thanks for having me.
Just before demo day as well.
Yes.
So
it's hectic around here today.
Absolutely. I'm glad that we could squeeze this in. But Mike, for anyone that isn't familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Yeah, so moved out to San Francisco in 2008, and ended up pretty lucky. A situation ended up at Box in 2008 when it was about 25 people. Was one of their first BD hires to help them as they were trying to transition a bit from being kind of just a consumer company to move into more of the B2B market. So spent some time there, went to another startup in the ed tech space that we grew to about 25 million or so in revenue before I left, and then again in like marketing partnership type roles, and then started Acceleprise in San Francisco about 4 years ago, with the premise that there were a lot of kind of generalist accelerators out there, but there weren't a lot around the country and frankly around the world focused on enterprise software and SaaS. Started socializing it with a lot of people in my network, people who were successful CEOs and early employees of SaaS companies like Box and Gainsight and Zuora and Salesforce, and got enough of a critical mass of people who were interested in getting involved both as investors and mentors, and so decided to run with it. And so we launched Acceleprise about 4 years ago in San Francisco and have been growing it ever since.
Sure. Obviously want to come back and dive in a little bit deeper onto Acceleprise, but just going back to your previous experience with Box and with the edtech startup as well, both of them you joined at a relatively early stage as well, and kind of saw them grow. Were there any sort of commonalities between the two companies as well, because they're operating in kind of different spaces?
Yeah. I mean, there were to some extent. They were pretty drastically different cultures and kind of leadership styles. So Box was very much like this scrappy startup, young founders, people moving a mile a minute, like trying to get probably more done than we should have been doing with that team. The other company was much more seasoned, kind of leadership, much later in their career. It felt like things were a little bit more calculated and systematic, but it also felt like things moved a little bit slower generally. So it was kind of interesting to see the parallels. They were very different from a culture standpoint. Both had some success in their own right. Obviously, Box had a lot of success. Academics Direct had some along the way, but yeah, pretty different experiences actually.
Sure. And obviously coming to Acceleprise, I'm learning very quickly that it's quite a process in terms of putting an accelerator program together.
Yes.
But I guess going back to the early days of Acceleprise, what was that process like in terms of you pulling all the pieces together and obviously building up that critical mass?
Yeah, it was a lot of work. No, I mean, I think it was all about. So in the beginning, it was just me. So I had to figure out like what are the highest ROI places to spend my time. And what I really kind of came to the conclusion of, like, you needed to have really, really good people involved who had a vested interest in it being successful. So really, like, getting the early advisors and mentors to buy in as LPs, I think, was really important, because it actually made sure that they were actually involved and not just like a big name person on the website. So I think that was really helpful. And then I just had a relentless focus on making sure the founders had an amazing experience. Like, I let other balls drop around, marketing. I was not on the top of a mountain, like, shouting out about what we were doing. Like, we were pretty under the radar. It was all about, if I could truly add value for the founders by just like hustling and doing anything I could, making connections for them, helping them operationally, that would inevitably allow us to organically build a brand of founders in the ecosystem who spoke highly about their experience with Acceleprise. And so that was really my focus for the first couple of years, when I was just proving out the model, and it was really just me. And now, we've grown into a bigger team, and we're on our second fund, and I think are much more systematic about how we add value to companies. But in the early days, it was all about just hustling to do that. But I think that's been like the critical component for us, and really our core KPI as an organization is kind of like having a really high NPS score of the founders going through the program. I just think that's the most important thing you can do as an accelerator.
Sure. I mean, there's strong parallels with startups in general, which is you don't have, a huge amount of resources, both financially and in terms of people and time. And so you really need to devote it, as you put it, to focusing on things that give you the most ROI.
Yeah, exactly.
And things. So I guess from the process of developing Acceleprise from the start, what you would have seen so many companies going through, both applying and going through Acceleprise. How many companies have gone through so far?
So we've invested in, I think, 76 companies so far.
Yeah.
Yeah.
What's I guess what's been the evolution for Acceleprise as well in terms of the companies or the program itself, in terms of what that looked like at the very early stages to what it's like now?
Yeah. So from a company perspective, I think just the channels of which we have met companies that we've ended up investing has evolved over time. In the early days, no one knew who we were. We had to do a lot of outbound to companies and create awareness of who we were. And, we got some referrals, but we hadn't built a massive network or community yet. So, we had less companies to choose from in the beginning. And we still have companies from the early days that are doing really well. I think now we've established much more of a brand. We have a very large network. So we just get a lot more inbound than we used to. We get a lot more referrals than we used to. So we end up having to do a little bit less outbound than we did in the early days. So from a company perspective, that's been a great trend to see, and I think will continue. From a program perspective, I would say, one of my weaknesses is I'm not an overly organized person. So I think in the early days, I think I would like to think we added a lot of value, and I think the founders would vouch for that. But now it's like night and day on how much more organized and structured we are around the programming and how we kind of hold ourselves accountable for being helpful to the companies. And so I give credit a lot to our team for coming in and really putting in a lot of those processes and structure in place that I, had some in my head, some just didn't do. So that's been great, but I think that's a big kind of evolution of the program over the last 4 years. Sure.
And obviously from an accelerator perspective, and especially the brand that Acceleprise has built, especially in SF, there's a huge amount of interest that comes in terms of startups wanting to be part of the program.
Yep.
What is it specifically that you look for in companies that you decide to invest in and bring in?
Yeah. So, I mean, at the stage we're investing at, which is pre-seed generally, I think first and foremost, it's the team. Like we spend a lot of time thinking about, has this team shown that they can execute in previous roles? Do they know the space and why are they building the company? And are they the right people to do it? And can they kind of like clearly articulate the market and how they view the market evolving over the next 5 years and how they kind of fit into that. So the team is a big part of it. We then also will look at obvious things that any venture fund would look at. So we'll look at kind of market opportunity, market dynamics, who else is in the market, how well funded are they, how fast are they moving, a lot of those kind of market dynamic things. And then to the extent that they have early customers and early revenue, which I would say more and more so is the case, we'll talk to customers, we'll look at like engagement with the application if that's relevant. So we'll try to assess that out a little bit. But yeah, I mean, we're looking first and foremost for teams that have very relevant experience to what they're building, have a clear understanding and conviction around where the market's going and how they fit in. And just have that like kind of relentless personality of like they're not going to give up easily and they're going to like do whatever it takes. And I think in the beginning too, like one of the things, just going back to the program, like one of the things that's evolved a little bit too is like we tried to do a lot of everything in the beginning, and I think what we really realized is like founder selling is one of the more important things we can focus on, and like helping companies with early go-to-market and traction is super important. So really also looking for founders that have that, even if they're a technical founder with no sales experience, like have that willingness to sell. I think that's a big like characteristic that you need to have, because as a CEO, you're always selling, whether it's selling to recruit, fundraising, sales with customers, like you need to have a willingness to do that and get good at it and be coached at it. And so that's something we look for. And then, the other thing we look for too is just how helpful can we be. So we'll really take that into account of like, do we have people in our network and experiences in our network that can be like actually really helpful for this company. So that's another thing that we'll look at as well.
So obviously, that's looking into the companies that you decide to bring into the program. But again, as you mentioned, there's about 70 companies that have gone through Acceleprise at the moment. What are some of the commonalities of companies that have gone through and been successful versus some that sort of struggle to make their mark?
Yeah. So I think one is that willingness of the founder to sell. I think there's been times where we've had technical founders who I think they just really struggled with the idea of selling. Like they just wanted to build a product and then hire salespeople, and like they viewed that as the way they were going to do it. And if you build a product and you don't have people using it, it's becoming increasingly harder to raise money, and then you can't really hire salespeople, and like that's not as easy as it maybe used to be. And so I think that's one, is like the founder's willingness to sell. I think another is just, again, going back to the founder, like their ability to have conviction around the market and the market opportunity and like what they're building and why they're building it is important for a lot of reasons. But it's also like one of those things of as a founder, you need to be really good at recruiting good people. And so if you can't do that early on, I think those sort of people then have a hard time selling the vision to investors and to potential employees and even to customers to some extent. So that's been another kind of characteristic trait that we look for within founders. Some of the teams, like the first product may not always be the right product, but the good founders who like really stay at it and are like hustling and not giving up easily, like they oftentimes will kind of figure it out by talking to a lot of customers, which again goes back to if you're not willing to be forcing yourself to be an extrovert and talking to customers and talking to people in the ecosystem, like it's harder to iterate as quickly if you're not doing that.
Yeah, absolutely. Obviously, part of being in an accelerator program like Acceleprise, that's that support network, not just off the mentors and the people that are involved, like yourself and Whitney, but also the rest of the cohort that's there as well. But that aside, there's still challenges that sort of every early stage startup faces.
Yep.
What are some of the common challenges that you see among early stage B2B SaaS companies?
Yeah, there's there's a bunch. So I think one is a lot of companies, especially if you're like a product type founder, tend to be like too much of a perfectionist. Like the product has to be exactly right before they start sending it to customers, and they wait too long to get feedback from customers. So I see that play out sometimes with like product and technical founders a bit too much. I think another one is if you're selling into kind of bigger enterprises, I've seen founders at the really early stage put too many eggs in one or two baskets with a big enterprise who's kind of stringing them along, showing some interest. But like the reality is a big enterprise rarely works with a pre-seed company in a meaningful way. And if they do, they know they have so much leverage and they hammer you on price. And so, and it'll always take longer than you think it's going to take. So you just need to be careful about not getting too excitable about those sort of opportunities and putting too many eggs in that basket, because you could spend 6-9 months on it and then run out of capital and it could not end the way you want it to end. So I think that's another mistake. Pricing is always a tricky one in the really early days. Like almost every single company we've worked with have figured out that they could price it higher as they got further along. And founders have this like instinct, or they just feel they just want to get people using it, right? So they like price it in a way that they think will have low friction, and I think they just sometimes leave money on the table. I think they're too quick to negotiate and give price discounts without asking for things in return. So that's another kind of mistake that I'll see at the really early stages when it's just like the founding team.
Sure. On pricing, do you have any any effective way for companies to understand what the right pricing model should be for them?
This is Teens, who was one of our LPs, he's the CEO of Zuora. He comes in and talks a lot to our teams, and one of the things he said about pricing really stuck with me, and I think it's a good gut check for founders to do, is just to think about, like, as you're building a sales team and bringing on AEs, in an ideal world, like you'd love to have an AE that can book kind of 4x what they cost all in, something like that, 4 to 5x. So, if the all-in comp for an AE is $100,000, like you want them to be able to book $400,000 in ARR in a year. Then if your product costs $40,000, like they need to close 10 deals in a year, 1 a month. About, like, as a founder who's selling and doing the early sales, like given your customers and your sales cycle, like does that feel reasonable? Like, do you think an AE could do that? And like do that gut check. Like, is that going to be possible, given the sales cycle? And oftentimes when founders do those sort of gut checks, they realize that it's going to be pretty hard, like especially if they're in the like 10K like ACV. And they realize, like, wow, they'd have to sell, 40 deals or, almost 1 a week, during the year. Like, they realize that that's pretty hard. So then, I think that's a good way to kind of gut check the pricing in the early days.
Yeah, and that applies to kind of all facets of a business as well. I've had a few other sort of interviews on the podcast as well, where when it comes to things like finances or even things like marketing and just understanding, here's the end result that you want, but what are the actual core components that go into that, and is that feasible, or what kind of other variables that need to change for that to work? I guess the accelerator kind of ecosystem is so competitive these days as well, and there are so many different options for founders. What are, from a founder perspective, what are things that they should look for in terms of deciding what the right program is for them? Yeah,
that's a good question. I think the first thing you should do is talk to founders who went through the program, because every accelerator is going to talk up how amazing they are. A lot of accelerators have some big name people at least on their website. How involved they are is a different question, but yeah, I think the most real kind of feedback you can and should get, like every founder should do this diligence, is talk to founders who have gone through the program. So I think that's number one. I think number two is just talk, like, really understand how they can be helpful, where they're going to focus their time, how it's structured. Does that fit into the timing of your company and what you're hoping to accomplish? So I think that's another look at just the success of the founders that have gone through the program. Like, have they moved the needle, whether it was in fundraising or sales, like whatever the goal is of the company. Like, it may be different for every company, but did they experience a meaningful impact by going through the program? But yeah, those are the types of things that I would do. Like, I think talking to founders, though, is the most important thing.
Sure. Obviously, the kind of core components that I see of Acceleprise are, assistance with the selling aspect,
Yep.
which Whitney just gave a detailed masterclass on that. But the other part of that is really kind of helping startups with their kind of next stage of funding.
Yep.
Again, just even speaking to some of the companies in the cohort, they've had, and some of the alumni have had tremendous amounts of success of going on to raise further capital post Acceleprise.
Yep.
What are, again, for anyone that's kind of going through that process, what are some of the things that they should have in place to ensure that they're opening up the right opportunities for themselves?
Yeah, I think it's so there's a couple of things with fundraising. One is just really understanding how to frame the business and the market opportunity, and having a lot of conviction around how you're framing it is one piece of it. The other, though, is like really running it like a sales process. Like, too many founders, because it is a big distraction. Like, there's no question it's a big distraction. And if too many founders kind of go in and out of fundraising. They take opportunistic meetings, but then, what they realize is, like, you're not creating any sort of urgency in the process. And if a VC if an investor has the option to like wait and get more information, like, why wouldn't they do that, right? So I think really running it like a process, like really identifying, like, okay, here are, like, spending time on it. Here are 40 or 50 funds or even partners at the fund who could be a good fit based on investments they've made in the past or things they're talking about publicly in blog posts and whatever else. And then, like, finding introductions to them. Obviously an accelerator is one way to get an introduction through them, and we make a lot of introductions for our companies, but there's introduction paths that are better than even us as an existing investor. Like, if you can find and build a relationship with portfolio founders who have raised money from that investor in the past, like, that's a way better introduction path. So I think just like really spending the time to run it like a process, figure out what your best path in is, so they're kind of leaning in going into the meeting as opposed to like finding reasons not to do it. And then really just like having it down. Then there's a lot of like smaller nuanced things which maybe are more particular to me, but I think there's little things you can do, like be very quick to respond to emails and requests for information, that I think make a difference for investors. It kind of just shows that you're like constantly thinking about your business, and shows the like tenacity and execution. And I think, those little things, like, that's not going to make or break it, but those little things help along the way, I think.
Sure. Kind of taking a little bit of a sidestep through our discussion around Acceleprise. So a lot of your background was, as you mentioned, on kind of partnerships marketing
Yep.
side. I think one of the things that's often overlooked from a lot of startups is the real value that you can get from having an effective partnership
Yep.
in place. I guess from a startup perspective, when should startups start thinking about partnerships in general as a growth strategy for
Yep.
them? And what should kind of the first steps be in establishing something, or at least exploring those opportunities?
Yeah. So I'm going to give you an answer that's probably frustrating, which is it depends a lot on the business. I think for some businesses it makes sense to do partnerships really early on for distribution. If you're filling a key kind of feature or product gap for a company, and they've had customer demand for it. So sometimes companies kind of force it, but there hasn't really been a lot of pull on from the end customer, and it's just something that they think would be good, but they haven't had that like customer pull yet. And I find that those are really hard. Like, you end up having to like do a bunch of work to integrate. You think you're going to get this big like massive distribution, and it actually like doesn't work out as well as you would think. But if they're getting pull from their customers of like, we really want this feature and we want it yesterday, and then like you can come in and help them drive that feature for their customers, then I think it can be really good for a startup. But you need to make sure that that alignment is there. And then I think one of the mistakes a lot of companies make is they spend all this time and energy on negotiating the partnership and the deal structure of it and then integrating it, but then don't think about or come up with a plan on like, okay, now we have this thing, how are we actually going to make sure it's successful? On both sides, like both the bigger company, because it's just not a priority for them, and you as a startup, like you spend so much mental energy on the pre-partnership, but not nearly enough on the post-partnership, and how do you make that successful? And that was something that we did, like even back at Box, like, you know, we were early to have an app on the Salesforce Exchange. And, you know, I think we thought like we'd put it up there and it would be wildly successful. And, you know, it really, I think in the early days took like building relationships with like the sales reps who would actually be the ones out kind of selling and like educating them on like why it was helpful for their customers. And so really thinking about that post-partnership piece of it, I think is super important.
Sure. And in terms of Acceleprise as well, you know, obviously there are some exciting things happening. We're launching in Australia as well. And you've got a new cohort coming up as well. Is that?
Yeah,
is that
so we have a new cohort coming up in San Francisco in July. So we're actively looking at companies and taking applications for it. And then we'll have our next cohort in New York start in September. So we'll open up applications for that pretty soon here.
Fantastic. And so obviously wanted to touch, you know, touch base with you around the Acceleprise Australia program as well, which we're kicking off in July as well, which we're super excited to be a part of. So yeah, do you want to talk a little bit more about the program and what your kind of view is of Australia and Acceleprise expanding in there?
Yeah, so I think there's been a lot of exciting things happening in the Australian market, and I think a lot of, you know, obviously Atlassian and Canva raising a big round recently, and just Xero having a big presence there. And so, you know, there's like an increasing and growing ecosystem around SaaS and enterprise software companies. And so started talking to Adir about the opportunity to kind of bring Acceleprise down there and really help be a catalyst to keep driving that kind of early SaaS ecosystem. And loved the idea, and so you know, really excited to kick it off, and obviously have you and Adir involved in doing that. But I think part of the value of what we can bring to the table is obviously a lot of companies in Australia that are, you know, have aspirations of selling into the U.S. market and, you know, potentially even raising money from U.S. investors, and so if we can help be that bridge of like getting them connected into our extensive networks in San Francisco and New York, whether it's for capital or customers, and have that be a meaningful part of the program and being involved in the Melbourne location, but then still kind of, you know, build their company wherever it makes sense to build their company. Having that access to those networks from a knowledge sharing customer, investor, and capital standpoint, I think will be really valuable for startups in Australia and you know, Asia and beyond. So that was part of the rationale for doing it, and why we're so excited to work with you guys. Yeah, absolutely. And I mean, getting to meet some of the companies here as well, and kind of telling them a little bit more about the Australian market as well. I think there'll be some interesting kind of value exchange on both sides for sure, with that front as well, which you know, obviously again we're super excited by. Yeah. So in terms of general applications, where can people go to find out more information, apply? So if you can go to, you can find it on AngelList. You can find all the applications. You can also go to accelerprise.vc and go to our website, and we'll have a link to applications, which will then link to the AngelList page. But we take all of our applications through AngelList. We also take referrals through our network quite a bit as well. So if you have mutual connections with any of us, you know, an intro through one of those paths always works as well. Fantastic. And for anyone that wants to find out more about you, say hello, get in touch, what's the best way for them to do that? Yeah, on Twitter, I'm MG Cardamone. My email is just mike@accelerprise.vc, so pretty accessible and easy to get in touch with. Great. I'll make sure all of those links are in the show notes. Mike, thanks for coming on the show, and super excited to kick off Acceleprise Australia. Yeah, likewise. Can't wait. Thanks.
Thanks for watching episode 87 of the Startup Playbook podcast. The show notes for this episode will be available at startupplaybook.co, and I'll add a link to this into the description below. If you want to find out more about the Acceleprise program, feel free to email me at rohit@acceleprise.vc. I'll be back next week with another episode. In the meantime, don't forget to like, share, and subscribe. Thanks for watching.